Good morning or afternoon, depending on where you are. This is John Belizaire, CEO of Soluna Holdings, and I'm joined today by our CFO, John Tunison. Hey, John.
Hey, how are you doing, John? Good to talk to
Hey.
everybody.
Well, welcome to our shareholders and prospective investors. We're going to be taking you through our 2024 annual and Q4 results and our business update. Before we begin, I'd like to read a quick legal preamble. The following content is completely qualified by the legal disclosures on the slide following this one. Encourage you all to read that. Our goal is to share with you some of our strategic thinking and financial analysis we'll be using to guide the growth of our business. The content is in line with our principles of being accountable and transparent with our shareholders. And as you all know, we operate in a hyper-dynamic economic environment, and that's a fancy way of saying things change quickly. What we are telling you here is based on our estimates and assumptions, which are our best guess, and we reserve the right to revise our point of view based on new information and changes in the business environment. Despite an uncertain dynamic environment, we must plan and make operating and investment decisions, and this presentation lays out some of that for your review. It also lays out historical information as we walk through the content. So we encourage you to read the next slide. If you're new to Soluna, there are three key things you need to understand about what's driving our focus today. The first is that AI is a fast-growing technology today with exponential growing demand for compute. And it also has a corresponding insatiable demand for power and data center availability. The next thing is clean energy goes to waste. Most people don't know this, but a good portion of the power that very large utility scale clean energy projects produce never makes it to the grid. And that is due to curtailment. And that curtailment causes a critical shortage to some extent for power for AI, HPC, and Bitcoin mining. At Soluna, we're focused on bridging that gap, essentially unlocking stranded energy from renewable energy projects and turning that into scalable computing power. We co-locate our data centers behind the meter at renewable power generation plants, which enables us to bypass long interconnection queues, which is becoming more important these days as you look at HPC. And it also allows us to improve the power economics and accelerate the time to market for new computing infrastructure. Our mission for the last 7 years has been to make renewable energy a global superpower using computing as a catalyst. We develop and operate digital infrastructure that taps into a growing global opportunity, the convergence of renewable energy and high-performance computing. We call this renewable computing. I'd next like to take you through some operational highlights from last year, 2024. I want to take you through the accomplishments of our business, both on the business side and the project side. On the business side, we hired a new CFO. John has been on the team now for over a year. John, have you hit the 1 year mark?
I just hit it actually 2 days ago.
All right. Well, happy birthday.
Thank you.
And we also secured a $25 million growth capital line from Yorkville Advisors. Last year, we closed that in the fall and essentially focused on getting it filed with the SEC and approved, and we received that approval early this quarter. We also reduced the convertible notes, paving the way to full conversion in the early part of 2025. We brought that down to zero, which started the process, if you will, of completely simplifying our capital structure, and we'll talk about that later in our presentation. We also launched an HPC line of business, including the potentially transformative AI HPC data center financing process as well. We've been working on that over the last several months, introducing ourselves to infrastructure investors, strategic investors that are interested in the strategic pipeline that we have available for AI. We also, as you know, signed a deal with HPE, and we subsequently made some changes to that, and we'll talk about that later in the presentation. On the project milestone side, We launched and developed a relationship with EDF Renewables, one of the largest IPPs in the world. Project Kadi is one of several projects that we have with that partner. Kadi is a 166 megawatt project in South Texas that has reached shovel readiness as of the time that we're recording and had neared shovel readiness by the end of 2024. Dorothy 2 was another major milestone for us last year. We completed the financing with our longtime partner Springlane and started the construction of Dorothy 2 in 2024. And we have progressed that phase one, the first 18 to 19 megawatts of the project, and we're on track for that being fully energized in that first phase being fully energized in the second quarter of this year, 2025, and we expect the entire project, that full 48 megawatts, to be online and fully ramped toward the latter part of this year. We also signed a term sheet for a new project, Project Rosa, a 187 megawatt project, also powered by wind. Both Rosa and Kadi are powered by very large wind farms. And we're beginning to develop and expand that project now and taking it through our development process. Our long-term pipeline grew considerably in 2024, exceeding 2.6 gigawatts. And the AI portion, we've now begun developing our sites for both Bitcoin and AI. We'll take you through that. And the AI portion of that has continued to grow as well. As I mentioned earlier, our approach to developing data centers is designed to address the acute curtailment issue with these large wind farms and solar projects and hydro projects around the country. And last year, through our operating projects, primarily at Dorothy, we consumed over 115,000 megawatt hours of curtailed energy and monetize that for those projects. That's one of the key values, if you will, that we bring to these independent power producers. If you look at this accomplishment list, 2024 was a very busy year for the company, and 2025 looks like it's going to be one too. I want to take you through some highlights of the business so you kind of get an understanding of sort of where we are today in terms of installed hash rate, which is as of December. It includes a mix of prop mining, hosting miners, D1A. It also includes some additional information around some of our new projects. We are at a 2.9 exahash level. We have 75 megawatts of operating projects, and we are essentially on our way to expanding that to over 478 megawatts. And that includes a combination of existing projects, Dorothy 2, Dorothy 1, Sophie, Dorothy 2, and the two projects I mentioned, which include Kadi and Rosa, and a small AI pilot at Dorothy called Grace. We have achieved over $38 million in revenue as of the end of last year. So that was our 2024 revenue levels. John's going to take us through how that compares to prior years and the growth rate of that. Our average power cost continues to be industry leading, around $31 per megawatt hour. I've talked about the curtailed energy monetized over 115,000, and we have now a growth equity line that we can use to begin to continue to grow the business. We're up to about 46 employees now, and our pipeline is over 2.6 gigawatts. We have a very efficient fleet of machines, which is a combination of our own and the customers that are hosting with us. That's less than 23 joules per terahash per second. Just giving you a flyby of our projects. We talk about our projects, and of course, we continue to name them after what we call catalyzers, women who have done amazing things in technology and energy. So Dorothy 1A and Dorothy 1B are our operating and spinning projects in Texas. To combine, they represent 50 megawatts. That was our big flagship push in 22 and 23 to bring Dorothy fully live. You're going to see the results of a full year of operation for Dorothy later in the presentation. Sophie, which is our Kentucky-based project, that was one of our first greenfield projects built from the ground up by our team, is now a hosting facility, and we provide a host of hosting solutions for a number of our hyperscale customers. Dorothy 1A is also a hosting facility, and Dorothy 1B is our only Bitcoin, proprietary Bitcoin mining operation, and we've partnered with Navitas in a joint venture in that project. Dorothy 2 is the next expansion of Dorothy, it's essentially doubling the size of that project. It will bring up 48 new megawatts for Bitcoin hosting, and the construction is going well and as planned. And we have a very robust pipeline and demand for that project, and we're in discussions with a number of hyperscalers and also have signed term sheets for portions of that project. Grace is our AI pilot. We've been doing a host of different engineering activities around designing a new type of data center there, and also trying to solve for some of the interesting engineering problems that come with putting an AI data center behind the meter with an intermittent power project. We have a host of solutions that allows us to deliver high performance computing and tier 3 capabilities as well. And then, of course, we have Kadi and Rosa, both of which will be very large, much larger than Dorothy, almost twice the size, and bring us more capacity for BTC hosting and AI. All of those projects are under development, and Kadi is the most mature of that set, and that project has reached several readiness. We're now focusing on capital formation, designing of our construction plan, and a host of other activities as well. So thanks for sticking with me so far. I want to turn the call over to John to take us through the 2024 highlights from a financial perspective.
Great. Thanks, John. So before I dive into all the financials, I want to hit some key highlights. These are the areas that I think best demonstrate some of the results that you're going to see in the financials. So first, I want to talk about our demand and response services. This is a program specifically within Texas, in conjunction with ERCOT, where we can essentially pledge some of the megawatts of our projects to be on short standby during peak load periods. What it means is on very short notice, a matter of a couple of minutes, ERCOT could send a signal that we need to make available those megawatts. And if we're able to meet those demands, then we qualify to earn revenue from this program. So this didn't just happen overnight. This was the culmination of over 2 years of development work by a number of members of our team. This included how to structure the program, how to make sure that we had the right technology solutions in place, that our Maestro operating system that controls our sites was able to effectively interface with this program. And the results speak for themselves. It went live very late in 2023, and we earned $2.1 million of revenue in 2024 related to this program. The program is divided into 4 periods throughout the year. You can see the ones that we've highlighted in blue. The winter and the summer are the more lucrative program periods. Those are the ones where there's more expectation of events requiring us to actually contribute the megawatts. Think of winter freezes in Texas or peak air conditioning loads in the summer. And this is a great benefit because of the way that we've structured our data centers. And one of the reasons why we're so effective with our data centers at Renewable Power Projects is we've built them to be flexible, and that we can turn them up, turn them down very quickly and efficiently. And that's what enables us to fully capitalize on this program. And we are, of course, participating in this going forward, and look forward to generating additional results in the future. John already alluded to, but another key driver of our financials this year has been Dorothy 1. This is again Dorothy 1A and 1B. Both projects together have met many important milestones. This is across the board. This is related to availability, profitability, management of costs, community engagement, customer success, IT, and engineering. And all of that combined generated very strong financial delivery. In particular, at Dorothy 1A, in 2024, we reached $13.7 million of revenue compared to 2023, where we generated $6.9 million. In December 2024, we changed out our largest customer, which is a good thing because we were able to replace one customer with two customers that have both a higher profitability profile and they bring later generation, more efficient machines. And our gross profit as a result of all of this increased to $5.3 million, or 39% of revenue, which is an increase of $3.6 million over 2023. Similarly, Dorothy 1B reached $17 million of revenue. This was driven by a combination of things, but in particular, we had a strong first half where the hash price was very robust. And this compared to 2023 revenue of $6.8 million. And despite the halving in April, which of course we knew was coming and anticipated, the site and how we manage it was able to grow in revenue. And it's been able to maintain its operational efficiency, even with an older generation of ASIC machines. And this resulted in a gross profit increase to $5.2 million, or 31% of revenue, over the $3.6 million that we earned in 2023. Another key thing that we did during 2024 was achieve significant capital structure simplification. I'll group this in three particular areas. First of all, as those who've been following Soluna for the last couple of years may know, we've had a convertible loan note facility in place. And in fact, we had $8.5 million remaining balance at the end of 2023. And through a series of actions and performance in our stock and other conditions, we were able to see that facility get fully converted out during 2024. And this significantly simplified the pathway for additional future financings and reduced various compliance burdens on the company, all a very strong positive for us. Additionally, we were able to achieve modifications to our Series B preferred stock underlying documents. There were a range of those. I think we've previously announced what those were, but I think the most significant is establishing a $5 conversion price. What this means is that our Series B preferred holder will have the ability to convert that facility out into common shares, which creates a strong pathway for retirement of that facility and a further simplification of our capital structure. And that leads to future financing flexibility. We also were able to obtain a series of modifications related to some of the consents and participation features, which are also a strong positive. Finally, we've mentioned we secured the SEPA, or the Standby Equity Purchase Agreement, with Yorkville Advisors. And this facility simply creates a lot more flexibility for us. It's an instrument that's available to us when we need it, when the market conditions are right, and it allows us to monetize via common equity. And it didn't come with, and this is important, a lot of the complicated enhancements and variability features that some of the prior financings did have. And so far, we've been able to successfully use the facility to do a combination of things, including paying debt, investing in our data center projects under development, and for just general working capital and general corporate purposes. The next thing that I think is important to note is movements in our unrestricted cash. Essentially, we have cash on the balance sheet, some of which is restricted from our use. This is and has been in the past due to a range of things, from customer deposits to certain escrow agreements related to some of our financings. And the lower we can drive that percentage, the more of the cash on our balance sheet becomes available for the company to use. And that's exactly what we did. Between 2023 and 2024, we saw a reduction of the restricted cash from 39% or $4 million to 25% or $2.7 million. And although the total cash on the balance sheet stayed roughly the same, the amount available to us went up by almost $1.5 million. So that's a strong benefit to our balance sheet. And we're accelerating our pipeline. We've got Dorothy 2 very far into the construction phase. As we've been announcing, that project remains on track. We expect to begin the energization process in 3 phases, starting here in a little over a month and continuing through to fourth quarter. Kati is progressing well. We've announced a number of milestones and look forward to announcing some more in the near future. This is going to be built in a couple of phases, 83 megawatts of each. And we're very excited to actually, for the first time in our history, have 2 projects under development simultaneously. And then ROSA is following closely on its heels. And we're working our way through, as John alluded to earlier, the ERCOT planning process and the processes required to bring that site to shovel ready. And so we're very excited about the progress that was made last year and that continues to be made this year. With that, I'm going to hand it back over to John. He already talked about our project data and cloud and some changes that we've made, and I'd like him to walk through some of that and put some context around that.
Thanks, John. I want to take you through Project Ada and Soluna Cloud, which is our GPU as a service business. We've made some strategic changes around our focus and relationship with HPE here recently. I want to take you back a few months around the launch experiences, post-launch, and what drove our strategic decision. When we formed the group, the focus was on 2 key areas. We wanted to learn as much as possible and begin to gain commercial experience in the AI high-performance computing market. And the focus was to use that commercial experience to essentially support our future plans for data center development, focused on building AI-ready data centers for large language models and other workloads. The underlying assumptions were that there was robust demand, and through that robust demand, we can build a commercial business to go do all of this learning. The second was to capitalize on lower cost of capital that was coming into the space, becoming available to companies like ours entering the new industry, that would allow us to pursue some high growth revenue opportunities in the compute infrastructure market. Now, after we signed, we had been talking to HPE now for several months. We started talking to them in late 23 into 24. And during that time, we saw pretty robust demand. There was some insight that enterprises were beginning to wake up for this. And most of the demand seemed to be also in these large AI labs. Once we signed the agreement and started to enter the market and execute on the contract, looking to sign on customers for reserve clusters, there was a market shift. Unbeknownst to us, there was lots of entry into the market, and supply for that H100 started to essentially change. The demand was softening, pricing was softening, and it became challenging for us to sign reserve deals that were economically profitable for the company. H200 demand also was starting to increase, essentially replacing some of the demand for H100s. If folks were looking for H200s, they would pause their interest in pursuing H100s, and that started to create some challenges for the H100 market as well. And that was the only GPU available to us in that initial cluster from HPE. The sizing of the clusters changed also later in the year and into early this year. A lot of that was driven by DeepSeek. You saw a huge increase in our pipeline and interest for access to GPUs, but the clusters had to be very large as people sort of woke up to the opportunity for getting more bang for the buck, if you will. And that was much larger than the cluster we had, and being able to grow more clustered would be very costly for the company and beyond our ability to capitalize that. So there were also alternate suppliers for GPUs entering the market. AMD, Huawei were also starting to enter the market with products. And so we focused on commercial deals that would give us some flexibility as we were looking for more profitable reserve deals. We closed a few smaller on-demand, lower time frame deals that were a little bit above the reserve market, but still below our borderline or profitability line. So as we were dealing with some of these structural challenges and profitability challenges with the business, we started to take a step back and look at the strategy for the company. In parallel, we were doing some capital formation, as we've hinted to, around the AI data center space. We learned a lot about what architecture you're going to need for some of these data centers. We also saw a huge increase in demand for energy, especially sustainable energy for these projects. And it became clear to us that we really need to sort of think about where in the marketplace we want to be. If you look at the AI space, if it's a continuum, if you will, on the far left, you have customers and domain experts. In the middle, you have this new neo-cloud market that we had become part of. That includes some of the large players like CoreWeave, Crusoe, Nebius that are in the space providing GPU as a service, and a number of different companies, smaller like Soluna and even smaller than us in some cases. And we also had marketplace players. All of those are really providing a need for the marketplace, which is getting access to GPUs. And then on the far right, you've got energy, data, and OEM providers. It became clear to us that we need to live further on the right side of the spectrum, where we're focusing on infrastructure. And given our perspective on the long-term profitability for GPU as a service, it became clear to us that we should be making a shift. The distraction, if you will, focusing on the growth driver for GPU as a service was just distracting us away from really developing our HPC data center business, and that was a more tangible opportunity for us. And so we made a decision in March 2025 to discontinue the partnership with HPE. We terminated the contract, and HPE subsequently signaled that they would begin terminating the services. We've contacted all of our customers, and we think that this decision is an important one for the company. It allows us to focus all of our energy on the real opportunity, which is the value of our extensive pipeline for building more capacity on the Bitcoin side, our core business, which is doing very well and very robust, and also expanding into the new AI data center space with the help of future joint ventures that we'll be working on. So that's what happened with Project Ada. I'd like to go through a series of questions that folks might have about this decision. And John, you can walk me through what those questions might be, and I'm happy to answer them.
Sure, I will. And just to point out to everybody, as you can see at the bottom, we've posted this FAQ and responses, and it's out there at solunacomputing.com/blog/HPE FAQ. So if you want to take a look at those closer, you're welcome to do that. So first, John, what is the exposure to the company from outstanding customer contracts and SLAs?
That's as I mentioned.
Sorry.
Right, for sure. That's a very good question. In the as I mentioned earlier, because of the profitability of reserved contracts, we tried not to sign those because we would be locking in a loss for a long period of time, and tried to sign more on-demand and more flexible contracts. So because we sign mostly those agreements with customers, it includes the right to reclaim the GPUs with a notice period. And so all of our customers have been notified about the termination, and a wind down process is underway on those on-demand agreements.
Great. And what is the exposure to the company from the termination of the agreement?
Well, one of our indirect subsidiaries, Soluna AI Cloud, notified HPE. That's where the contract is signed. We notified them of the termination for convenience. That's within our right. And this form of termination does not remove the obligation to pay all the remaining payments on the contract. And under the agreement, HPE has some obligation to mitigate this exposure by essentially reclaiming the GPUs and selling them to other customers, for example.
And what are the next steps for Soluna Cloud's business?
Well, our next step is to focus on the development of our power pipeline. Our 2.6 gigawatt pipeline is now a dual asset, if you will. One, it will fuel the growth of our Bitcoin hosting business. We've done an incredible job of building relationships with some of the largest hyperscale miners, both here and beyond. And Dorothy 2 will be the first expansion of that, and we'll begin to design these projects to have both crypto and AI components. The second opportunity is to build out an AI infrastructure business. Since that will be our main primary focus, we will focus on building and developing these assets to support data centers for AI. And we're going to be hyper-focused on developing partnerships with data center operators and infrastructure investors to help us to identify those sites that are ideal for these new applications and also build those out. And we're pursuing those joint ventures right now, and you can look for those among the list of future catalysts for 2025.
Great. And about equipment, will we purchase equipment from HPE, and do they remain a viable vendor for GPU hardware?
So we have a great relationship with HPE, despite what has happened in this partnership. We've always had a very transparent and collaborative conversation with them. HPE retains the ownership of the GPUs, and that allows them to resell them, as I mentioned earlier. And the contract delivered the equipment to Soluna as a managed service. So we don't have any intentions to acquire those assets. We have essentially put them back to the GreenLake business so that they can resell them to customers as a managed service or for on-prem, whatever the case may be. And that will be an HPE decision.
Great. And what impact does this have on the Green Cloud notes used to finance this deal?
So Green Cloud was a debt product that we signed at the lower companies. It was announced in a Form 8K last week from the time of this recording. There were certain modifications that we made to those notes to ensure that the termination of the HPE agreement would have no direct impact on the loan and the company's obligations on that loan. And the company fully expects to continue to service the loan as part of these modifications.
And will this decision negatively impact Soluna's AI and high-performance compute business or ability to raise capital for future projects?
John, we don't expect this to impact our reputation as a renewable energy-powered data center developer. Our core business remains sound, and its application to AI also remains very viable. Our foray into the AI GPU as a service, while not successful based on our objectives, it has helped the company understand the AI infrastructure market that was one of our primary objectives and potential opportunities for our growth. And we have active discussions underway right now with joint venture partners to develop some of these pipeline projects into AI data centers. And the partners include data center operators and leading neocloud companies who provide GPU as a services themselves. And by exiting the business, we will no longer be competitors with them, if you will. So we'll be true partners. And they have a real need for co-location in data center space. And that will allow us to build a more collaborative relationship with them where we provide the infrastructure and they can deploy their robust businesses inside of our facilities. Very similar to what we did with the Bitcoin hosting space. We were a proprietary miner with some hosting, and we've shifted our business to primarily hosting, allowing us to build long-term relationships with some of the largest miners. You can envisage something similar here, where we build infrastructure and hyperscale and very large hyperscale neocloud companies become our customers.
And John, I'm going to call an audible on question number 7. Of course, we're posting answers to these out on our website, but I think you covered what changed to cause this strategic pivot adequately in the last slide. So I'm going to skip this question 8. Will this negatively impact Soluna's digital assets, or Bitcoin hosting, Bitcoin mining business?
No, we do not expect this to impact our core business, or the lines such as Bitcoin hosting and Bitcoin mining, nor will it affect our emerging HPC business, which is focused more on the data center side. Each of these businesses are standalone silos, if you will. On a consolidated business basis, this will affect the business in 2 ways. One is the continuing payments to Green Cloud debt will be required with no offsetting revenue from the decommissioning of the HPE business. And although confined to the Soluna Cloud subsidiary, potential disruptions from any HPE actions related to their own rights under the contract. But we do not expect the financials for this agreement and change to the agreement to continue as part of 2025 and beyond. You should see a robust picture in this coming year.
And so why not renegotiate the HPE contract rather than terminate it?
So as I mentioned, our relationship with HPE has been a very open and transparent one. We did explore restructuring options with HPE to address the profitability of the service and also support scaling for a growing pipeline. So we were thinking about ways in which we might restructure the first deal, buy some more GPUs for them, perhaps at more favorable pricing. Unfortunately, we could not come to an agreement on approaches that would benefit both parties. And so, look, we appreciate the collaboration with HPE, but we had to do what was best for Soluna. And termination was the only option that made sense, absent a major restructuring or repricing of the contract.
Great. And similar to question 7, I think you covered number 10 pretty well, the rationale for the deal at inception. And on 11, I'll take that. We've put a lot of information in the 10K, including all of the financial impacts, and it lays that out in pretty clear detail. So I would refer you to take a look there. So I'll ask you, John, the last question. What is the team's strategic focus for 2025? Is it hosting Bitcoin, AI? And does Soluna expect to purchase or rent chips in the future?
Well, I'll leave the response to that later, but a quick preview. There are really 4 key areas of focus for 2025. One is expanding our pipeline. The other is focus on AI infrastructure, optimizing our projects, and capital formation. We'll talk more about that focus later in the presentation. Thanks, John. Back to you.
Great. Now I'd like to go through the financial highlights. So I'm going to talk about 6 of these. We've alluded to several of them already, but I'll go through them in a little bit more detail and then go into some other financial highlights. So we've talked a lot about the revenue, both on a quarterly basis and a full year basis. We achieved substantial improvement in the revenue. So on a quarterly basis, between third quarter of 2024 and fourth quarter of 2024, we had a 10% increase from 7.5 million to 8.3 million. And this was driven predominantly due to higher hash price, but also the change out of customers that I talked about, where we've brought in customers with a better profitability profile, as well as newer and more efficient equipment. And on a full year basis, our revenue improved 80%, going up to 38 million compared to last year at 21.1. And the largest single driver of this was a full year of full operation of our Dorothy 1A and Dorothy 1B projects. I talked about the cash growth, specifically in the unrestricted cash growth, which is really the cash on the balance sheet that is usable by the company for our working capital needs. And achieving a 23% increase has been a substantial benefit to the company. When you look at the bottom line, although clearly the cost of the project data and cloud business was there, even despite that, we had a substantial increase from a loss of 3.5 million to actually the first time a positive full year EBITDA of 0.9 million, which is a strong testament to the strength of our core business underlying and a good indicator of what you should see going forward. Gross profit, when you look at excluding project data, which is a good indicator of the health of our underlying core business, we achieved 15.1 million compared to last year, 5.2 million. This is an increase of over $9.9 million, which is substantial. And again, a testament to the underlying core business. And I talked about the simplifications that we achieved to our capital structure, whether that's getting the convertible loans to convert out, reducing debt on the balance sheet by 8.5 million, or achieving substantial modifications to our Series B preferred stock documents, or securing the $25 million SEPA or standby equity purchase facility. All of this has combined to both simplify the capital structure and simplify and the process and increase the flexibility of raising necessary capital in the future. And we've already used some of these funds, for example, to pay off debts, where we've, in 2024, nearly completely paid off the $1.7 million project debt at Dorothy 1B. And actually, subsequent to the end of the year, we have paid that off. If I shift and I talk about revenue, I think this chart speaks for itself. If you look at the strong, consistent quarter over quarter over quarter over quarter and year over year revenue growth, this is the story of our Dorothy projects ramping quickly, ramping to fully being online, and continuing to deliver quarter over quarter at a high level. And this just gives you the details of how we went from 21 million last year to over 38 million in revenue this year. And I talked about gross profit, specifically excluding project data. I would draw you to, over on the left, you can see that if we include ADA, still our gross profit was 9.4 million, which is still 4.2 million higher than last year. So again, the core of the business is delivering well, and it's doing so quarter over quarter and year over year. Strong testament to the core business. EBITDA, again, you see we had a strong year. It tapered off in the third and fourth quarter, driven predominantly by project data and cloud, and also some hash price movements during that time period. But again, can't underscore the importance of moving from a loss of 3.5 million in the prior year to a positive 0.9 million of EBITDA this year. Very, very strong delivery. So I'm going to hand it back over to John. He's kind of alluded to it already, but he's going to talk about what does this mean for our focus going forward in 2025 and beyond.
Thanks, John. Well, as you can see, 2024 was a very strong year for our core business. I'd like to talk about 2025 and our focus this year. There are four key areas we're going to be focusing on. First is, as we've alluded to, continuing to develop AI with a more focused effort around the infrastructure side of AI. So our goal is to form partnerships to enhance the value of our considerable and continuing growth in our pipeline by developing AI and HPC data center joint ventures. We're also going to be adding expertise at the governance level at our companies, where we bring advisory, governance, and employee experience with deep AI and HPC expertise to support our growth strategy. The next is we will continue to optimize our projects. We've talked a lot about energizing Dorothy 2. That energization and ramp will be taking place throughout 2025, which will help to enhance our profitability as a company, increase our revenues. We're going to continue to enhance the profitability and operational efficiency of our existing facilities, and also focus on carefully curating our customer mix of operating data centers, and while overall improving the satisfaction of those customers. We have a new approach we call relentless stewardship, which is a very focused effort on the way we deliver our services with customers, the communication style, the information we share with them, and how we go to market on the Bitcoin hosting side. We, of course, continue to focus on capital formation. We're going to be pursuing opportunities to support the key growth initiatives that we have underway, including Project Kadi, both on the Bitcoin side and the AI side. Rosa, continuing to get capital to advance that to shovel readiness. We'll be leveraging the strength in our project cash flows to refinance or pull forward the value of existing projects, and also to deploy debt financing in some of our new projects as well to allow us to scale the operation over time. And then the last is continuing to grow our key strategic asset, which is our pipeline. We have an effort to increase the number of curtailment assessments that we perform with our IPP partners and new partners that have reached out to us. We've had a considerable increase in inbound activity with large infrastructure funds, asset owners from around the world who want to partner with us on their renewable energy assets. So you'll see us focusing on advancing more projects to shovel readiness status, and also executing additional project term sheets. So 4 key areas: develop AI, optimize projects, and capital formation, and of course, continuing to grow the pipeline. So with that, I want to thank everyone for tuning in and listening to our 2024 annual and Q4 results. Our results really reflect continued momentum and strong execution across our core businesses. The groundbreaking and energization and ramp of Dorothy 2 will increase our Bitcoin hosting capacity to over 123 megawatts. And the significant expansion of our project pipeline and launching of our HPC business will help us to meet the growing demand for sustainable AI compute. All of these milestones mark a pivotal phase of growth and really validate our long-term strategy to lead the next wave of clean, efficient infrastructure for both Bitcoin hosting and AI. I want to continue to encourage you to stay with us and track our progress across this year. We expect to announce a number of important catalysts as we grow, and we'll use this forum and others to communicate. I also want to make one comment about our team. It's been a very exciting addition to have John Tunison join our team as CFO, and I'm honored to lead the broader senior management team and our teams throughout our data center projects. Their dedication and grit has been the driving force behind our continued momentum and success. Thanks for joining us today. John, it's a pleasure to, as usual. Is this our first John and John show, I guess, presenting our K? And
I think we did one
AMA.
podcast, maybe it was where we did it together, but this might be the first live one, so I enjoyed it too.
Great. Any closing remarks for the folks listening?
No, I think I would just say stay tuned for more news. We are hard at work on a number of really exciting things and look forward to sharing those details with you. We hope you can appreciate, like we do, the tangible results that we've delivered in the financials, and that we've done a good job of helping you to understand what that means for going forward. And we think it means a lot of good things. So stay tuned and look forward to chatting some more and bringing more clarity as we go forward.
You can connect with us on X. We're at Soluna Holdings. You can also find us on LinkedIn. That's at our company page, Soluna Holdings. And we have a newsletter. We encourage you to subscribe by following the link here, and you'll see more links in the show notes or the notes below this recording. Thanks again for joining us. Until next time.